Hello, chart watchers, and welcome to this Friday, June 28th, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Well, we are ending a week and a month and a quarter on a pretty good note so far. Dow Jones Industrial Average up 62 points, the S&P 500 up 9, the NASDAQ up 25, and once again seeing some excellent relative strength in the Russell 2000. Looks like a bottoming head and shoulders. We are now testing the neckline. This would be a big breakout here for the small caps, up more than 1% today. 10-year Treasury yield continues to drift lower. It is up slightly today, but still down near the recent lows and remains in that longer-term downtrend. Volatility index still stubbornly staying up a little bit, even though we have seen a little bounce in the overall markets. Want to keep an eye on that, because if we do break out on the VIX to the upside while the market's trying to break out, that could be a short-term warning for the market. So we do want to watch that VIX. We want to see that VIX start to roll back over. Financials leading, you can see here, breaking out above an area that we've struggled with for the past couple of months, getting through that 2750 area. Financials, surprisingly, have been leading the market over the last 90 days. That is the top sector in terms of quarterly performance. Industrials also rallying here after moving straight up. Looks maybe like a cup starting to form here off of this uptrend. XLI up almost 0.75% today. Healthcare not performing as well. You can see down today, still in this little bit of a downdraft that it's been in the past week or so. Technology also just kind of hovering near a potential breakout area around the 79 level. But we are down just slightly on technology. Banks having a really strong day today, helping to lead the financials higher. Distillers and vintners also doing well on the heels of Constellation Brands' earnings report. However, you can see that we did have a breakout above the earlier June high. So far, that is a false breakout. We've come back down. I'd like to see some strength into the close there. Speaking of Constellation Brands, it is one of the top performers in the S&P 500 today. You can see the big gap up, getting back up above that June high, trying to break its recent downtrend based on its earnings. And then a couple of financials, a lot of financials actually in the news today, but JP Morgan raising their dividend, increasing their buyback. You can see moving up, trying to take out about a 7-week high. Goldman Sachs also in the news, among many of the banks that have announced that their capital plans have been approved by the Federal Reserve. See Goldman Sachs moving higher. Talked about this one in the seasonality earlier this week. Goldman Sachs loves the month of July and seems to be ending June with a bang here as we head into July. All right, Mary Ellen, end of the day or end of the week, not really end of the day, but end of the week, end of the quarter. What do you take away from this quarter?
Well, it's been certainly very strong. You probably know this, the Dow is on track to have their best quarter in 80 years. Big top performer there. So it's all about coming back from the May dismay. And I think we're looking really good. I really like that small caps are coming in. That's a beautiful looking potential turnaround there. To have them participate would only buoy us further.
Yeah, I didn't realize that this would be the best quarter for the Dow in 80 years. That takes us back to 1939.
Oh my, you did that,
yeah, I was a young fella. All right, that
you were not even a glint in anyone's eye quite yet.
Yeah, I was still. Yeah, I don't remember that quarter. I can tell you that. But that is an interesting fact. I mean, 80 years. That's nothing to sneeze at. I mean, that's pretty good performance. I know we were coming off of a rough fourth quarter, but still, there have been a lot of rough quarters in the last 80 years, and that's something that we're looking at the best performance in that long a period of time.
Yeah, it's pretty impressive.
Yeah. So the Dow is hot. Of course, today's Friday, so we'll get into the what's hot, what's not. But first, let me go over some of the upcoming schedule that we have for you. We do have a list of items here for you, but number one is StockCharts TV premiere of Chartwise Women, which will be featuring Mary Ellen McGonigal and Aaron Swinlin. Looking forward to that show, Mary Ellen.
Pretty exciting, yeah. Everyone else is going to be getting out their picnic baskets, and we'll be sharing our wisdom. And stop on by.
Yeah, and that's the first Market Watchers Live spinoff. I always have to throw that in there.
Oh, yeah.
That's pretty cool.
Watch out, Tom. We might eclipse you.
Hey, do it. Go for it. July 4th, of course, Independence Day here in the U.S. Markets are closed, so there'll be no Market Watchers live, but certainly happy 4th to everybody. Tony Dwyer will then be joining us the following week along with John Murphy. And do want to mention, mark your calendars, July 22nd through the 26th, the Relative Strength Week. And we're going to have a lot of folks on here discussing relative strength, how they use it, how they review it, what it means to them. And of course, we talk about relative strength on here all the time. So I think that's going to be a week you are definitely going to want to tune into. I don't think enough time is spent, quite honestly, on relative strength. I think sometimes we get so caught up in whether something's going up or down, we don't really care, or we lose sight of whether or not it's actually outperforming the S&P 500, which is what I use as a benchmark. Anyhow, as far as today's agenda goes, what's hot, what's not? Of course, it's Friday, so we're going to get into that, let you bring you up to date on some things this week. Turning point. We'll let you know. We'll talk about that segment a little bit later. Of course, the 10 in 10, we'll start with Wyndham Destinations, WYND. If you want to take a look at that chart and just see what you think of it technically, we'll see if we agree when I take a look at that one and 9 others. And then at the end of the show, we're going to wrap up with Trade Talk and What Would You Do? Trade Talk, of course, this weekend, U.S. and China presidents getting back together. So you're definitely going to want to stick around. We're going to talk about some areas of the market when the trade deal kind of goes south, or when it has gone south in the past, some areas and individual stocks that have been hit hard. So if the talks don't go so well this weekend, I don't know. We'll see what happens next week. But anyhow, let's get into some of the economic reports today. We did have a couple of them that came out. You can see there on your screen, May personal income and consumer spending both came out. Personal income higher than expected. That was good news. Bad news was the June Chicago PMI, 49.7, under that 50 level versus 53.6. Big disappointment there. And then the June consumer sentiment actually came in just above expectations, which was good. As far as the reaction in the Treasury market, 10-year Treasury yield remains under pressure. We are somewhat flat today. We were up earlier today. Got as high as 2.03%. Now we're back down under 2.01. So same old, same old. The overall downtrend here continues. One thing that is somewhat surprising to me is that as the 10-year Treasury yield has continued to drift almost straight down the last 2.5 months, financials have led this past quarter on a relative basis. It's been the best performing sector. Normally, financials outperform when the Treasury yield is moving up. So I think maybe there's some anticipation going on. Maybe traders and market participants are looking at financials as having been beaten up too much on a relative basis. And so they're just starting to move in, thinking how much lower can the 10-year Treasury yield and Treasury yields in general go. I don't know what the answer is, but I do know that this is unusual to see money rotating into financials when you have this kind of deterioration in the 10-year Treasury yield. Anyhow, that will be worth taking a look at in the next quarter. And keep in mind, that is the poll question for today. So check that out. We'd love to hear what you have to say about this. Weigh in. Are we going to see the financials continue to lead in quarter 3, given this backdrop so far of declining Treasury yields? As far as earnings coming out, last night we had a big one. Nike came out and disappointed on their bottom line, falling short of estimates. Progress Software, big report there, nice gap up afterwards. And then Constellation Brands coming in with a very strong report as well. So let's take a look first. I want to get into that Nike report. And the reason I've been watching footwear, because I think footwear has been at a key point. And until we can get a more definitive look into what's going on with footwear, I think stocks like Nike are kind of on the fence. I'm not really sure what to do with Nike here. You can see we've been going sideways since putting in that high in April. We've come back down, put in a lower low, lower than what we had in March. And it looks like that bearish engulfing candle came in at a lower high. So right now, at least I would say in the short to maybe intermediate term, we have a downtrend going on here with Nike. And if we go into the relative chart, you will see that Nike, one of the problems I have is that the footwear group relative to the S&P 500 continues to move lower. And it's been like this since the beginning of March. And you can see Nike has been underperforming the S&P, but it has been kind of going along for the ride with the footwear group as a whole. So there's nothing exciting about this. I was hoping maybe that we'd get a catalyst with Nike's earnings. That did not come to fruition, and instead it's been more of the same since we gapped up a little bit at the open, just more selling. So Nike, I would be careful, and especially recently we've had $82 support on Nike. I would not want to lose that level, so let's keep an eye on that. PRGS, Progress Software. Many of the software stocks obviously have been performing extremely well. Progress gapped up and then sold off for a quarter. And look at this, gapping up again right to this level. I think if we could get a close over 47, that would be very bullish for Progress Software. We are getting another jump here in relative strength, breaking that relative downtrend versus software. What's missing? A breakout on the price chart. Close above 47, I think, would be very bullish for PRGS. They did beat by a wide margin on their top line, 103.5 million versus 98.2 million. That was the estimate. And then bottom line, 65 cents versus 59 cents. They guided quarter three earnings per share higher, and they raised their fiscal year 19 guidance overall. So again, all we really need here is this absolute breakout. Volume's there. I think the relative strength's picking up, but can we make a statement and break out? STZ, Constellation Brands, nice gap up here, but are we failing at that 50-day? This is another stock when you go back and you take a look, it's just, going lower. The high is below the high that we saw in October. The S&P 500 recently broke out to an all-time high, but Constellation Brands has not. And so we got a little bit of a mixed picture here. Nice reaction to earnings, but when I look at the overall strength, the stock versus its peers, closer to its 52-week low than its 52-week high, although we are starting to see a little bit of a bounce with these earnings. The overall group, though, has been downtrending. Until we can maybe get a breakout above that May high, I'm going to be a little nervous about this group. It is part of the consumer staples area, which is defensive. If the market breaks out, I suspect that the staples area will underperform, making it even more difficult for a stock like Constellation Brands to outperform the S&P 500. One chart that I wanted to show you today, I think that this is one that is really looking good, bouncing off of some key support, and that's the home construction group. Talked about this earlier this week. This 780 level, you can see that's about where we broke out in April above 780. We've come back down now, put in a double bottom at this level, starting to move back up. And you might say, well, the daily PPO is weak below the center line. Are we going to fail at these moving averages? I would simply move back big picture and look at the weekly chart. We have had another successful test. Been talking about this all week, that 20-week moving average. And you can see when we have these successful tests, what has happened in the past. Technical analysis doesn't provide us a guarantee, but it does give us a roadmap. And I think that your home construction group here is looking pretty good on this weekly chart, bouncing off that 20-week EMA. All right, it is time for the scooter mover of the day. Let's see, it was down close. Actually, it's still on here. It's the middle of the top up on mid-cap stocks, Cabot Corp. Now, when we pull this chart up, I think it's pretty clear. Yes, it's making a big move, but it has a lot of overhead resistance here. We could straighten or lengthen this chart, take a look at a relative chart. But here, I think it's pretty obvious. $48 has been a wall of resistance. We want to be really careful there. This is a stock that on a relative basis has not been a leader within its industry, and its industry really hasn't been that strong versus the S&P. So for me, until I see that breakout, I would actually use the strength to sell if I owned it. You can always get back in slightly higher if you make this breakout, but look at all these failures at $48. No guarantee we're going through this time, and that is your scooter mover of the day.
All righty. Let's go ahead and get started here with what's hot and what's not. I'm sorry, we are going to start with upgrades and downgrades first. And the first stock that we're going to be covering today is Umana Gold. The ticker symbol is AUY. For those of you that are gold bugs out there, you may know a lot of these gold ETFs are hitting 6-year highs in price. But AUY, they increased their guidance, their production guidance. They're increasing production analysts like that. We can see the stock did gap up today, almost 2.5%. This is a very bullish looking, near-term bullish looking chart. We can see that this RSI is positive, as is the MACD. Take a look at this shorter term 10-day simple moving average crossing up through not only this red 50-day, but also now up through that 200-day moving average. That's a golden cross. So AUY certainly looks constructive following their upgrade. The next one is KBH. This is a home builder. They came out with numbers yesterday, exceeded expectations, gapped up. Today, we are seeing a continuation of that with a 2.5% increase on the upgrade. And we can see that it's making the RSI is now up here in positive territory. MACD poised to have that black line up through the red in a constructive manner. It's been a real debate here with these home builders, but yesterday's news certainly was constructive, and we can see a break above that 50-day. Yesterday, we saw big volume, so we could see a continuation there. AutoZone was also upgraded, Oppenheimer from a perform to outperform, so it appears poised to potentially reverse this really mini downturn here, but overall quite constructive. And Procter & Gamble was also upgraded by Goldman. The stock's not really responding. Some of these consumer staples, we're going to get into that later, are waffling a bit in here. And then LSTR is the last upgrade. We can take a look at here. We can see the stock is up 2% on the upgrade. This is a transportation related stock. I like how it's broken up above these key simple moving average. RSI and MACD is constructive. Let's take a look at some of the downgrades for today. First one that we'll take a look at is Biogen, and this stock really just cannot get out of these doldrums following this big gap down here in March on poor news. The stock is down about 1.5%, but not a very constructive looking chart to begin with. Another downgrade today is Canadian Pacific, a rail stock, really not responding. The stock is just holding up here quite nicely. A lot of these Canadian rail stocks are really in longer term bullish uptrends. So you like to see the stock be able to withstand a downgrade, which it's doing. And then another downgrade for today is Darden Restaurants, DRI, and this also is withstanding. The stock is actually up on the day, potentially forming the right side of this base. And we can see it's finding support at these upward trending simple moving averages. RSI and MACD is positive. KMX, this is another stock that was downgraded. You can only imagine perhaps valuation related, but also just shrugging it off. It's down just a little bit, finding support at this upward trending 10-day simple moving average. RSI and MACD are both positive. So KMX still looking constructive despite the potential harm from a downgrade. And let's take a look at WING. This is Wingstop, and this stock has been a real winner this year. We're looking at a daily price chart here. I can quickly pull up a weekly to give you a bit more in the way of perspective so that you can really see just how well this stock has performed year to date. And this is another one. It's up despite the downgrade, and the uptrend still seems very firmly in place for this stock. And then one last name that was downgraded was Live Nation. LYV is the ticker symbol. And we can take a look at that because this is another one that is still performing quite well. But it is dipping a bit today, down 2% on the news. But we are still in good standing as far as your other technical indicators. And that was your upgrades and downgrades. Be sure and stay tuned. We'll be right back with what's hot and what's not.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
The human component around it with all the commentators that we have. I mean, look at the lineup with Murphy and Pring and Morris. These are household names in the industry. They're all tied to stock charts.
People are always surprised with how many tools are on there that they didn't know about. 5 or 6 different methods for finding relative strength, as an example.
Not only do we have these really great chart tools, but we have this amazing chart school, and you have these shows, and you have all these ways that you can learn.
Welcome back. We are going to jump right into the what's hot portion of what's not. And this first stock that I have up here is Micron. For those of you that follow the market super closely, you may know that they did come out with numbers yesterday. And in fact, they beat estimates, and they also guided higher going forward. Management was really quite bullish regarding the outlook. And also, some of you may be aware that a lot of these semiconductor stocks did get hit very hard, and we are going to get further into this later as we talk about trade talk. But this demise here in May was all about the China trade war. So we are seeing MU is quite a bellwether within semiconductors. So it really is having an impact on the entire group. So cycling back, we are looking at the stock. It's up over 14% for the week. We can see this big gap up, and actually it was 2 days ago that they came out with their numbers. Take a look at this volume. When you see that type of big volume, very constructive. It's telling you institutions want in. Now the stock has broken above all of these key simple moving average with today's action. MACD poised to break above that net neutral zero, and the RSI is positive. So this could be really constructive, all things considered, as we go into the potential trade talks. So we can look at another couple of these other semiconductor stocks that are having a good week. NVIDIA is another one that is on the heels of MU, is reversing potentially its downtrend. Not quite as healthy looking, however. We've broken above this 50-day. Take a look at the downtrend in that 200-day simple moving average. That creates a very ominous potential barrier. But we are getting other outside. RSI is positive, as is the MACD. We're trading at about 164. So conceivably, we could very well advance to that 177, and that would be a nice uptick, at least 5% potential before any possible resistance. XLNX is another one that is also benefiting from this turnaround. Let's see if I can get this ticker symbol in here and we can take a quick look at it. But this is another one in that semiconductor space that is much healthier and further along in its turnaround. We can certainly continue on. You'll see any number of these semiconductors that are potentially reversing their recent downtrends on Micron's positive news. Let's see if I can. So here's KLAC, and AMD is another one, Advanced Micro. Let's go ahead and move on to a different area that is also doing well this week, and that's healthcare. We've talked a lot in the past about the fact that healthcare really was a big underperformer going into this month, but they've managed to turn around somewhat. This is HCA hospital stock. We can see that this is that malaise that we saw earlier in the year in the group, but it is more recently reversing that downtrend, poised to break out of this longer term base constructively now above these key simple moving averages. RSI and MACD are positive. We can take a look at another healthcare stock that is also in the throes of trying to turn. Now, this one is not nearly as constructive looking. I will tell you, it does have a 4.1% yield, but it still has quite a bit of work to do. We talked about this 200-day being potential resistance. It failed. We're coming up on that again. So it'll be interesting to see how the stock behaves as it approaches. This is Universal Health Services, UHS. Again, a little more advanced in its potential downtrend reversal. We can see that 10-day up through the red 50-day golden cross. Your RSI and your MACD are constructive, and UHS actually looks very interesting here. Let's go ahead and move on. Take a look at some of these internet stocks that are up this week. The first one that we can take a look at is Grubhub. These guys are food delivery service. They were big winners last year. Very innovative. Competition came in, knocked them down. They're really being, a lot of analysts are back in positive as far as their outlook for the stock. So we can see these gaps up here. The stock is poised to potentially turn around and reverse this downtrend. We can see the stock is now up above these key simple moving averages. We have that near-term golden cross. Again, we're at 77. That 200-day is at 83, a break above that, and we could really be off to the races with this stock. Another internet stock is MOMO. This is a Chinese internet stock, and we can see in line with the Chinese market, it's declined, but it really has reversed that downtrend. It does appear to have more upside potential ahead here. The stock's up 7%. We can look at MCHI very quickly, look at the Chinese stock market's turnaround. Momo is advancing ahead of that, which is very bullish. One other area that we can take a quick look at that it has pockets of strength is defense-related stocks. This is Triumph, TGI. They had strategic deals. There also was talk about privatization of the company. So a lot of this, I will tell you, is speculative as far as the turnaround, but it is advancing almost 20%. And the volume really is not quite there, but it will be interesting to see if this one can continue to advance higher because it has broken above these key moving averages. One other name that we can take a look at in the defense area is Common. I'm trying to think how to pronounce that, but we can see that the stock is up 5%. They did sell a unit of business this week that will allow them to focus on their main business. I like this breakout of this very long base. Take a look at that volume. RSI and MACD are positive, so that's a very constructive looking chart there in the industrial space.
All right, let's keep it going. We're going to go into the financials. Financials, if you look at this 1 week chart of the S&P sectors, you can see financials certainly leading on a relative basis versus all of the other sectors. And so what has actually been doing well in the financial area? Well, here is a relative chart of a couple of industry groups. This is the reinsurance industry within that financial space. And you can see that relative strength line moving up here because it's having a really good week. And you can see down here, this is the absolute move in the reinsurance group. The problem is, number one, we got some overhead resistance we're going to have to get through. And number two, we have been downtrending really for about the last 6-7 months or so. And you can see that weekly relative PPO is well below the center line. So yes, the group's been hot this week. I'm not sure that I'm buying into it just yet, but we'll see. Banks, another area. Banks have been in this downtrend. We really want to watch this 20-week moving average. You can see we just can't seem to sustain anything above that. When we get through that 20-day and we hold it, I think that will be the time to get more aggressive with these bank stocks. As we move up, got a little overhead resistance at 460, but this is another area that we do at least want to keep an eye on. As far as that reinsurance group, one of the reasons why we're seeing strength, Berkshire Hathaway. Berkshire Hathaway's had a super week here, 5 days in a row going higher, trading above its 20-day moving average, but it's still been an underperformer versus the S&P 500. And every time we get a little bit of relative strength, we turn back down again. So I'm not a buyer here on Berkshire until we can negotiate this major overhead resistance up about 223, 224. Until then, I would be a little careful. RGA, another reinsurance company. This is Reinsurance Group of America. This one to me looks better because we are making the breakout. So on a relative basis, this is a better performer. Now, again, you still have the same struggles with the overall group relative to the S&P 500, but at least this stock is showing outperformance amongst its peers. Moving further along in the bank group, I want to just pull up a few of these banks, maybe that you don't know as much about, but these are some of the leaders this week, and we'll look at see how that relative strength appears. Oritani Financial, huge move this week. You can see challenging overhead resistance, probably going to back off that level, I would suspect, but make no mistake, we got a smaller bank that is trying to break out relative to its peers. DB, this is Deutsche Bank. Much larger bank, obviously, but it has been in a downtrend for a while. So yes, it has had a good week, but but I don't know that I trust this one in the longer term because it has been a long-term underperformer. I'd be afraid of this rolling over. And then the last one I want to mention is ALLY. This is one we mentioned earlier this week. I forget which segment it was in earlier this week, but we were getting this breakout, and I talked about the relative strength in this stock versus its banking peers. And as it's making this breakout, look at the volume coming in. I think this is one of the stocks you're probably not going to hear a lot about, but under the surface, showing a lot of relative strength. So those are the stocks that we had this week for What's Hot. I'm going to jump into some areas of the market that maybe were not so hot. The one area I really want to focus on is real estate. And you can see, again, looking back at a 1 week summary, real estate has been the weakest area. And when you pull up the real estate, you can see diversified REITs, industrial and office REITs, and specialty REITs have all been underperforming. However, specialty REITs actually look better to me than the other two. Let's first start with diversified REITs. Here you've got the diversified REITs, been trending higher for over a year now relative to the S&P 500, so I think that's good. The pullback, though, we have failed to hold the relative breakout that we enjoyed in May, and we have continued going down now for about 4 weeks. And I would watch that 50-week moving average pretty closely here. Next up is the industrial and office REITs. This is closer to that 50-week moving average. I don't think that relative uptrend is nearly as established. So that gives me reason for pause. The one I think of these three that look the best are the specialty REITs. Specialty REITs, after bottoming in October, I think have been in a very strong relative uptrend. This pullback literally is coming back just about to where we broke out from and testing the 20-week moving average, which has been an area where we have seen money rotate back into the specialty REITs. Also, if you look at the absolute chart, there's no question this is an area of the market that has been doing very well, broke out above a double top back earlier in 2019 and continues to strengthen. So to me, this pullback probably presents better opportunities than the others. But first, let's take a look at the diversified REITs. Crown Castle, this is one that broke out. I think this pullback is viable. This is one of the best performers versus the diversified REITs. You can see just recently hit a 52-week relative high. This pullback getting very close to that breakout level. Among the industrial and office REITs, CXP. This is one that has broken down. So when I see a stock like this in a group that I'm not really that keen on and it's making a breakdown, and oh, by the way, the stock relative to its peer group setting a new 52-week low, this is the type of stock with this kind of breakdown I have no interest whatsoever. And then finally, in that specialty REIT space, last stock here, American Tower. Now, again, specialty REITs have been on fire. American Tower has been one of the best stocks within the group. And here you can see that the specialty REITs earlier in June set a 52-week relative high versus the S&P 500. So this is the type of stock that's been under pressure. If I was looking for a real estate play, I think American Tower could be just the one.
Very interesting, yes. And I think I'm going to carry on that theme in the sense that I'm going to share with you stocks that were hit this week, but I view it as an opportunity. So the first area we're going to take a look at here are software stocks. This is IGV. It's one of the bigger, better known software ETFs. And I wanted to point out to you, this is the action in the beginning of the week, pull back to that 50-day simple moving average, and we can see it's having a V-shaped recovery subsequent to that. So now let's go ahead and drill down. The names I'm going to be sharing with you today have sold off the most going into today, but I will tell you after a lot of review, these stocks are also the better performers. They had the highest relative outperformance, so they are by and large winning stocks. So the first name that we're looking at is Shopify, SHOP, and you can see this extensive advance into this week. The stock did break below this 10-day simple moving average, big volume, and it is reversing. It didn't quite touch that 50-day simple moving average. I would argue that this is an opportunity to get the stock certainly cheaper than it was a week ago. I would like to see it break above that 10-day simple moving average, but we can see the RSI is positive. MACD remained in positive territory during this pullback. Let's take a look at another big winning software stock for the year. This is Veeva, VEEV is the ticker symbol. And this stock, again, big winner year to date, just dips below this 10-day simple moving average. And again, RSI, MACD, all above this net neutral and positive territory, and very well could be a good opportunity for those of you that may have missed certainly the move earlier in the year. Another one that certainly fits this profile is Everbridge, EVBG. We can see the stock really gapped up here last week, hit an all-time high in price, certainly was due a pullback, and we are getting just that. But again, your outlying technical indicators are staying very positive. This stock was down 7% going into today. And then one last name that we can take a quick look at here, because there certainly are a myriad number of examples, but I'm keying us in on those winners year to date, those relative outperformers that when this group comes back could very well. Now this is Zendesk, Z-E-N, not quite as constructive. I'm going to go ahead and take a look at another one that was down 5%, Workday, WDAY, but very much clearly in an uptrend. We can see your simple moving averages all trending upward. So that is the software space. Let's go ahead and look not so healthy in some of these healthcare stocks. And the first name we're going to look at is Bellwether Celgene, CELG. We can see this dip down here on the week. The stock is down about 7%. Your RSI and your MACD are also negative. So this does not look constructive. Again, it broke this 50-day simple moving average, big volume. Your shorter term key moving average poised to break down below that longer term in negative fashion. This has everything to do with the Bristol Myers. Let's take a look at BMY. This company stock is down about 7% on the week. Take a look at this deterioration here. And they did announce plans to divest one of Celgene's blockbuster drugs. As for those of you that don't recall, Bristol Myers and Celgene are combining forces, but they were mandated to, Bristol Myers was mandated to divest one of Celgene's major drugs. So we can see this big drop, huge volume, does not bode well. Your simple moving averages are in a downtrend. Another stock that's down, and this is also merger related, is AbbVie, ABBV. They're acquiring AGN, and we can see that this markets don't like it. The stock did gap down. It is reversing some of that gap down from Monday, but the stock is still down about 9% for the week. And then one last one in this healthcare space, ALGN. This was a periodic big winner this year. These guys do the Invisalign braces, and we can see that more recently it has been deteriorating. They had a distribution deal that was in the works. It did terminate last week, so we're continuing to see deterioration. The stock is very much in a near-term downtrend, having broken below each of these key moving averages. Let's move on to a different area. We can take a look. I'd mentioned earlier some of these consumer staples stocks that have gotten hit, and Kellogg, certainly a well-known name in this space. We can take a look at this. The company did come out with earnings. The markets sort of liked it, but now they are deteriorating again. They did announce a restructuring last week. They're going to be cutting 150 jobs, but it is going to cost the company $35 million. So we can see that Kellogg, very messy chart, not attractive in any fashion. Another stock that we can take a look at in this consumer staple space is Smucker's, SJM. Take a look at this deteriorating and now drop. And this is all about low growth prospects, analysts lowering estimates. Your RSI, your MACD is negative. Stock has broken below these key simple moving averages. The volume on your down days on average has been higher than on your up days, so the further potential downside with SJM. We can also take a look at Church & Dwight, CHD. And this is another one that broke their 50-day simple moving average on volume. Not very encouraging. And all of this is despite upgraded growth prospects for the company. So it'll be interesting to see if they can reverse this near-term downtrend. The RSI and your MACD is also negative. And then one last area that we can just take a quick look at, for those of you that may not know that utility stocks really got hit this week. We can see this break here below these simple moving averages. And of course, we can then drill down to look at any number of stocks within these utilities, but a lot of these were hitting new highs, had very high valuations, and were certainly due a pullback. So that's it for what's hot and what's not.
Excellent. Got through a bunch of stocks there on both sides. And this was kind of one of those weeks. I mean, in the past, we've either had a week where it's been really hot or a week that's been not so hot. This week has kind of just been kind of both, you know?
Yeah, very interestingly.
And I would also add too, we didn't really talk about it, but really the end of this week, we have seen small caps really on fire here. I don't know if this continues, but the last couple of days, very, very strong relative performance in the small caps.
You're right. Encouraging.
Yeah. All right. So we are going to move into Turning Point. And for those of you who are new to this segment, Turning Point is just simply, you know, Mary Ellen and I looking on the charts and just seeing stocks that are at key areas. You know, so I know, Mary Ellen, you use your 50-day moving average a lot is kind of your barometer of a stock that's healthy.
Yes, my dividing line.
Yeah, and I do a lot of price support, resistance, but also some moving averages and so forth. So I thought maybe what we would do is share with everybody some stocks that look like to us that they are at key turning points. It doesn't mean that if it's hitting overhead resistance that we would short them, or if it's coming down hitting support, we buy them. It's just something that's interesting to us on the charts and something maybe to watch for. So, Mary Ellen, what do you have for Turning Point today?
Oh, sure. Yeah, let's go ahead and get started. I have focused, I talked earlier about the fact that healthcare stocks really were in a downtrending period. A lot of that had to do with political headwinds out of Washington. So they really got hit in that March, April period. So we are still in the throes of seeing some of these stocks potentially reversing that downtrend. So this first one that we're looking at, it's a bit of a smaller name, but it's
I'm not seeing charts. Just make sure you share that.
Oh, yes, that would help. Okay, so let's go ahead and share the screen here. And just to mention, so the first stock that we are going to be looking at, see if I can get my cursor working. Here we go. Okay, so this is a smaller cap medical stock, Cantel Medical. And this deterioration, again, March, April, really tough period for a lot of these healthcare stocks. We started to see this turnaround down here in the beginning of June. Now today, we've broken up above that 200-day simple moving average. And what that will do over time is eventually pull these other simple moving averages up with it so that then we have a whole different look rather than this steep downtrend. And the RSI is positive, as is the MACD, but certainly one to take a look at. Another healthcare stock, also a little bit on the smaller side, but this is where the vibrancy has been. This is ICU Medical, and we can see another look where the stock's price has advanced above these key simple moving averages, which will often act as resistance during this downward trending phase. Now we've broken up above it. Today we're up another 3%, and we can see that there is not a lot in the way of overhead resistance, so the stock is freer to potentially advance. Another stock in that healthcare space is Integra, IART. And I think you can see a theme here because this March-April period, this is that deterioration that we saw in a number of healthcare stocks. This did start to reverse in the beginning of June, but I'm even more bullish now because, again, we've broken up above this potential area of resistance, and we are now poised to break out of this longer-term base. And another stock that we can look at that looks very interesting to me is Eaton Vance. This is an asset management stock and a larger name within that grouping. And we can see also, I think you're going to get a theme here, but as far as reversing these near-term downtrends, this stock has broken out. 42 was that breakout level of this base. So we are now above that. The stock is at 43, and we can see with that, again, not a lot in the way of overhead supply. The stock is freer to advance. So from here, certainly you would want to take a look because a lot of these asset management firms, they will ebb and flow depending on their asset base, whether it's increasing or not. Analysts are raising estimates for this stock. And then one last name that we can take a look at, this is newer issue LYTY. And I'm not normally that enthusiastic about new issue stocks, but if we look at this on a daily, we can see that the stock is advancing after tumbling from its initial IPO. So the stock did come out here, IPO'd in the beginning of April, immediately deteriorated, but now we are potentially reversing that downtrend, and the stock does appear poised to trade a bit higher. So I would take a look at Lyft. It could be ready for liftoff.
Yeah, I think Lyft and Uber. I know. I think Uber had broken. Was trading to it at its all-time high.
Yes,
all-time high is somewhat relative. It hasn't really been trading that long, but technically, I mean, it is hard for me to trade, fairly new IPOs because I trade on technicals, which is a study of price history. And if you don't have much price history, it's really hard to study it.
Right.
But I do think in these newer companies, when they do pull back after their IPO and then come back up and break to a new high, that can be very significant. So worth mentioning for sure. Okay, as far as turning point goes here, I'm going to go first with Applied Materials. I've talked about this company recently. I think that this one continues to strengthen within the semiconductor space. You can see here, Applied Materials versus its semiconductor peers, right near about a 10.5-month high now. So this company continues to strengthen among its peers. And I see 3 overhead resistance levels here that we are approaching and testing right now. First of all, we had 2 failures at 44. We had the April high at 45, and then 46.5 was a gap resistance area. And you can also see this 44 level was the bottom of gap resistance here. So I think this whole 44, 46.5 area is going to be pretty important. If Applied Materials can break through these areas of resistance and show leadership among the semiconductors, I think this is a stock you want to really consider as we go into the next quarter. So certainly Applied Materials is one that I think is at a key turning point. Manulife Financial. Stock put in a double top in April and early May. We are all the way back up there. You can see every time we get up around this 1830, 1840 level, we seem to struggle. And overall, Manulife has been a pretty strong relative performer versus the life insurance group. So we have a stock that's uptrending on a relative basis, trying to make a breakout. A breakout here would be significant. Another one, I think, at a turning point. Next up, Intuit. Intuit clearly is struggling when it gets to 270. We saw it in April. We saw it again just a little over a week ago when we got up into the upper 260s, couldn't get through. Now we're pulling back and we're testing the rising 20-day, which has crossed back up above that 50. So I think the uptrend is intact as long as we stay above that 20-day moving average, but ultimately we need to clear 270. So I think this area right here is a turning point. Are we going to roll back over below the 20? Because if we do, you need to be aware that Intuit has not been performing well relative to the software group. So if it fails to hold the 20-day, I think it could be a turning point to the downside. A breakout, however, and we could see this downtrend line break. So I think this is a turning point really in both directions. Let's see. Next up is Xylem, XYL. Pretty clear overhead resistance near $84, just below 84. We're coming upon it again. Going to need a little bit more volume, I think, to get through. So that's something to watch. But recently, this stock relative to the industrial machinery group broke out to a 52-week high. So you have a leader here. If we can get the breakout, that would be a turning point. Next up is Maxim Integrated Products. Big gap up in early May, pulled all the way back, tested this prior area, which turned out to be a turning point to the low side around 51. And now here we are making our move back up, 61.5, a turning point. Insight Corp, INCY. This is in the biotech space, and I really like this company. Biotech's going down. Look at Insight relative to the biotechs breaking out. Volume here has been coming in as we test that overhead resistance. Pulled back. I remember talking about this on MarketWatchers Live recently. I wanted to see if that 20-day moving average would hold. So far, we're printing a hammer after almost testing it. A breakout here with the relative strength building in this stock, I think would be very bullish. Turning point. Watch 88.5 on Insight for a breakout. And the last one I have here is Deere & Company, DE. After a huge move down back in May, trade-related move to the downside. Now we're coming roaring back up. Got a big G20 summit this weekend. Trade discussions between the U.S. and China perhaps taking place again. And we are right up against a very significant resistance level for Deere. So I think this is a major turning point. And that is the end of Turning Point. Here's a summary of the stocks that Mary Ellen and I just covered. Wow, it is, that was a mouthful. Got to catch my breath.
Deep breath.
Deep breath. But we are going to go into the 10 in 10 now. So
super. Yeah, lots of interesting looking stocks out there. As you can see, I'm focusing on those that did not perform with room to run. So
yes. I'm going to start with the 10 in 10. And hopefully everybody had a chance to take a look at it and see what you thought of Wyndham Destinations. But WYND, I actually like this stock if it can make the breakout and if its relative strength can maybe break back out above some of these recent relative highs. Until then, I would look elsewhere. I like the group. The hotel group, you can see right now it is breaking or trying to break to an absolute new high. And on a relative basis, this group has been outperforming throughout most of 2019 and on the verge of breaking to a new relative high, one that we haven't seen in 11 months. So I think the group is strong. I think the stock is improving, but it needs to get the breakout on an absolute basis, and we really need to see the relative strength turn up. If we don't, then I'd probably look elsewhere within this hotel group, but I do like the group overall.
Oh, the next one is a Bitcoin play, OSTK.
Yeah, I remember talking about Bitcoin and the fact that OSTK does have a little bit of, I forget what they do. Do you have the fundamentals by chance?
Yeah, they have a subsidiary. They are involved, heavily involved in Bitcoin.
Okay.
Yeah.
Yeah, so anytime, I mean, this stock's been on the downtrend, but obviously Bitcoin is starting to get a little bit more exciting. And as a result, maybe that's why we're seeing this money rotating into overstock. What I would watch for is if this truly is an uptrend beginning, and so far it's acting like it, you can see that these 20-day tests tend to provide some pretty good support. So I would continue to watch that. Volume, without a doubt, has definitely strengthened here. Certainly looks more bullish as you move higher and you see this kind of volume coming in. That makes you feel pretty good. I would just simply say this has not been a great relative stock versus the specialty retail group, its peers. So if it failed to hold the 20-day moving average on a pullback, I would certainly take note of that and probably be out of it. But as long as this uptrend continues, I think this is one that, maybe for those who are willing to take on more risk might make sense.
And one last note, actually, yesterday they announced they're selling their retail portion, so it's going to be all pure Bitcoin.
Oh, wow. That's big.
Yeah, big announcement. PEN is the next one.
Yeah, I think the management team or the board at Overstock probably looked at their relative strength and said, you know what, maybe we should be out of relative or out of
furniture or their.
Maybe we don't belong. Yeah, I kind of lost out on the moment too. I had a really funny comment on one of your stocks earlier that you mentioned. I think it was Cantel Medical. And
you can't tell me?
I haven't even said anything yet. You're already laughing. No, I was just thinking, this would be a great business. Somebody comes in and says, hey, Doc, I'm not feeling very well. How'd those tests come out? I can't tell.
Not what you want your
That's what we do.
To say.
We can't tell anything. But anyway, all right. Penumbra did make the breakout here, pulled back, testing price support and the 20-day moving average. I mean, if you're going to take a shot on the stock, you like the company, I think this is a pretty good area. It was trading at 170 a couple of weeks ago. This pullback to the 20-day is lining up perfectly with price support. Overall, relative strength, I think, looks pretty good. Medical equipment versus the S&P just broke out. Yeah, this is one I think looks kind of interesting here, right here on the 20-day.
Very good. The next one is PayPal, PYPL. Kind of languishing a bit here.
Thanks for putting up with my jokes and laughing at me.
I really enjoy it. It provides levity.
Something. I'm not sure what it provides, but we'll go with levity for now. Yeah, PayPal, this has been a really strong stock within the software group or financial administration. but beautiful move to the upside in the group. The stock has been a great relative performer. Recently, it's pulled back, but I've seen that with a lot of leaders recently. And I think some of these strong stocks, I think that presents opportunities. I mean, if you look back to PayPal, when it's pulled back for a period of time, that's when you want to get in. And rather than, grow overly concerned. Now, if we went back and closed below the 50-day moving average, maybe that would give me pause or at least reason to pause here. But otherwise, I think this is pulling back to a key support level. We're now off $7, $8 from the recent high. I think it's a buy here.
Very good. Yeah. The next one is the software MDB is the ticker symbol.
All right, MongoDB. All right, this has been a really good performer for a while. I think this pullback back to 150, hitting the 50-day. I really like the reversal here. I love software. I've talked about this one becoming a leader. It broke to a 52-week high on very strong volume to open June. I think this pullback is definitely providing an opportunity here. It is a smaller company, so it's definitely riskier. Not going to be for everyone, but right there was the breakout. We're a little bit below that level, but when we came out with the earnings, and I think the initial move here was down, and then we came back up. So I'm going to just draw a line right in there. But that is about where we opened, I believe, after the earnings came out. And you can see we have retraced all the way back to that level and now starting to turn back to the upside. I like the reward to risk here. I think MDB is a buy.
Very good. And the next one is Xilinx, XLNX. We touched on that briefly earlier.
Yeah, Xilinx, I think, is making a nice move in recovery back up above its 20 and 50-day moving average. And you can see the last pullback held that 20-day moving average. And the stock is beginning to show a little bit of leadership again. So what I'm looking at here, first of all, and I think there are going to be a couple areas that the stock's going to have to negotiate. I think the big selling that came in, the reaction high took us up to about 121. And then I think the big gap down around 126, that's going to be a big test for Xilinx. I think if we go back through that and we start to see the relative strength, continue to move back to the upside, I think that would be a good sign. The question I have is it just rallying because we're getting a bounce in the semiconductors? Because you can see the overall relative strength really hasn't moved that much to the upside. So yes, it looks good. It's trending more to the upside, but I would like to see the relative strength pick up. And a big question for me is what happens when it gets into the low to mid 120s.
Very good. The next big tech name is Cisco, CSCO.
All right. I do want to mention that when I went over the seasonality recently, Cisco was one of the stocks that actually does tend to perform well in July. It's having a rough day today. Short term, I'd like to see it hold this low, but really the big level that it needs to hold is going to be where we had that double bottom or close to the double bottom. So right now, what I'm looking at is just Cisco off of an uptrend, sideways consolidating. I think the closer we get down to this 51, 52 level, the better I like it, especially knowing that it tends to be a strong July performer.
Okay, then we have a financial stock, ALLY.
Yeah, that was one I mentioned earlier. I really liked. Yeah. Had a hot week, but we'll go ahead and annotate it here. Yeah, I mean, it's a very strong, beautiful move to the upside. I love that relative strength. So, if banks start to get healthier, what I'm interested in is finding the stocks that are already performing well, the leaders. Because if more money comes into the banking group, it's not like all of a sudden folks are going to look at this particular company, this bank, and say, well, I don't want to invest in it anymore. I think what we're already seeing is the fact that we are getting accumulation. We can see on the breakout increase in volume there. And given the backdrop of the financials, which has been mostly trending lower for the last year, off of that December low, this stock continues to move higher. So that's what's leading to all of this relative strength. I think it's a good-looking chart, and I think could be one of the big winners if the financials and the banks in particular do continue to move up.
Very good. And this last one is a UK-based tech company. DABA is the ticker symbol.
B as in boy? Or
oh, D as in David, A, Victor, A.
Okay. DAVA. Yeah, I don't know this one. I think off the uptrend, I see a nice little cup forming here. Volume is only 14,000 shares, so it's not for me. I like to have my stocks have a lot more volume than that. But if you don't mind that, then I would say simply you have a really nice uptrend in play. Very nice rounded bottom forming a cup here. and it comes off of an uptrend, which is what you want to see with a cup with handle pattern. So I would expect, based on everything here that is showing up, so we got, here's the uptrend, there's the cup. What I would expect is for this stock to pull back maybe close to that 38 level near the 20-day moving average and then make the breakout. But again, for me, because of that very, very light volume, I would not trade it. I just think there's too much manipulation potential. When a stock doesn't trade many shares, many market makers can't make a market in that stock because it's not profitable. So what you end up having is a stock that has very, very few market makers. And if you only have a couple market makers that control most of the action and they see the order flow, you can imagine what kind of back and forth you might get. So I'm just a little concerned about these stocks that don't trade much. So I would personally bail, but that is what it looks like to me technically.
Very good. Well done.
Oh, did we get through them all?
Yes.
I don't think I did SAIC, but I tell you what I will do.
Oh my goodness, Tom.
That's all right. I will add it at the end of the show. After the show's over, I'll add it. It'll be in the MarketWatchers live blog later. So if you want to go back and look at that.
It's a great looking chart.
Yeah, SAIC is a very good looking chart. I'm very familiar.
Oh dear.
Make sure you check out that MarketWatchers live blog later and you can check that out. When we get back, we will check in on a market update and discuss areas of the market that could be impacted next week based on trade talks this weekend.
Hi, I'm Arthur Hill.
And I'm Julius de Kempenaar.
And you're watching SCC TV.
The ChartWatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the ChartWatchers newsletter.
Okay, welcome back, everybody. And let's take a look. Oh, wait a second here.
I'm sorry.
Here we go. This is your final update of the day. You got the Dow Jones Industrial Average. Currently up 82 points, so it is moving back up toward the high of the day, which is good. The S&P 500 rising up 13, the NASDAQ having a strong day up 35. But the really big news today, and really last 2 days, is the strong relative performance in the small cap group, up 19 points today, which is looks like roughly 1.2%. 10-year Treasury yield continues to drift lower, back to 2%. I'll tell you, I really don't know what to make of that, especially with the financials leading over the last 3 months, but it is what it is. The volatility index continuing to stay in this range. It almost looks like a symmetrical triangle to me off of this uptrend where we just keep squeezing and squeezing. A move to the downside would be more bullish for the market. Financials leading today. Industrials going along for the ride as well. Not doing so well, healthcare, which is still in negative territory, and technology, which has climbed back into positive territory, but lagging the overall market. Banks continue to do well. I think this is a very significant breakout here that we want to pay attention to. The distillers and vintners having a strong day, but can we break above 430 on the close? I'll be watching that. Constellation Brands leading the move to the upside, very strong earnings report. And then JP Morgan and Goldman Sachs both having big days. A lot of banks in the news today. As far as the sector summary goes, you can see financials leading so far today, up 1.3%. Industrials up about 0.85%, 0.84%. And then there you can see the healthcare group on a relative basis lagging, the only sector in negative territory. Pharma is really the big drag, as you can see, healthcare providers as well. Biotech, however, disguised a little bit because it's in the overall weak group, but biotech having a pretty strong day today. And this leads potentially into a strong July. We know historically, I'm going to pull up that seasonality for you. One final thing here, but you can see July, biotechs have gone up 74% of Julys over the last 20 years, and they average going up 4.4%. So I think this is an area of the market that you definitely want to be considering. I would stick with some of the stronger stocks in this group. I think I've mentioned ILMN is one that has been performing well, trying to make another breakout. VCYT, full disclosure, I own this one, but this is a stock that I think making a breakout recently above those April highs, pulling back, now starting to strengthen again. These are a couple of names that I think are an INCY, INCY, Insight, another one that you might want to consider pulling back. I mentioned earlier in the show, nice looking hammer there off that 20-day test earlier today. All right, we are going to move into our final two segments, the first of which is trade talk. And essentially what we're going to do, Mary Ellen, I know every time the market starts to get a little fearful, there are areas, there are pockets of the market that don't do very well if the trade talks are seemingly breaking down. So maybe just looking ahead to something that we could have to face next week if one or the other, China or the U.S., walks out on trade talks this weekend. What areas or what are you looking at as though we might watch as we head into next week?
Absolutely. And certainly the well-known area, and we touched on this in the beginning, is going to be these semiconductor stocks. And most of these semiconductor stocks derive at least a good portion of their revenues from China. So hence the outlook there. Also, for those of you that have been following the trade talks closely, there is a company, Huawei, where the U.S. has banned us working with them, and that's impacted some stocks more than others. So the first two names I am going to focus on here do derive a good portion of their sales directly from Huawei. And of course, if the trade talks do proceed in a fashion that is viewed as positive, these stocks will benefit, but watch out if the talks deteriorate. So the first name that we're going to take a look at is AVGO. This, of course, is Broadcom. And we did touch upon this a bit earlier. And just for you to know, they do derive 5% of their sales from Huawei. They are one of the largest semiconductor companies out there. And we can see that this is that deterioration with those trade fears that brought the broader markets down in May. The stock is attempting to reverse, and we can see constructively today, it has broken up above this 50-day simple moving average. Your RSI and your MACD are both positive. So should we get continuing positive outlook and noises from G20 talks and in particular US-China trade talk, that would bode well for a continuation of that downtrend reversal. Micron is another one, and they derive 13% of their sales from Huawei, which is very, very big. But this is also this company that came out with numbers earlier this week. Stock gapped up because management was bullish on US-China trade prospects, and they guided higher for the remainder of the year. So we can see that this stock is further along in its advance. I'm not going to review it further, but I did want to make a point that they do derive a fairly large portion of their sales from the large Huawei, the largest tech company in China, so they will be impacted. Let's take a look at another area that could very easily get hit if we do see a deterioration in trade talks, and that's going to be retail. This is XRT. We are looking at the retail ETF. Again, this just fell out of bed here in May because a lot of U.S. Retailers, they import from China, but also most impacted is going to be these apparel manufacturers and distributors, because China is a major area of sourcing for these companies. So the first one that we can take a look at is Skechers. They've been cited by analysts as being very highly reactive to any news that's related to China, but we can see that more recently it is quite constructive, and this is all about the bullish outlook on the US-China trade talk. We can see that the stock is forming a really short-term nice one-week base here that it's poised to break out of. The RSI and the MACD are both positive, and it is nicely far along as far as reversing this downtrend here, but it is one that analysts have cited is going to be really very responsive to any kind of news. The other thing to know about China and the impact within these apparel manufacturers is the fact that a lot of the lower tier companies, and I'll just pull up very quickly, GIL is an example, These guys do a lot in the way of t-shirts. Some of the lower end manufacturers are now moving their facilities over to Vietnam, Indonesia, and elsewhere. So they're able to withstand that. But if you look at higher end clothing, and by higher end, I mean these are going to be a little more difficult to manufacture, and that is outdoor wear. This is Columbia Sportswear, COLM, and this would be a prime example because they don't have the capability to as easily, quickly withdraw their operations, move to Vietnam and elsewhere where they can no longer be at the helm or at the wind, whatever way the wind is blowing with particular trade talks. So COLM, should we see a deterioration in trade talks, could very well be negatively impacted. And I'm going to take a look at one other. This is a technology stock, LYTE, and it is a telecom related stock, but it's also very much 18% of their sales is derived from Huawei, again, that China company, so that if trade talks deteriorate, LYTE would be impacted because, again, almost 20% of their sales is derived from China. And so we can see this reversal of the downtrend is very much in place with the currently positive outlook for these talks. So this is another one that you would want to have on your radar as potentially benefiting should talks proceed in a positive fashion, but of course, not so good otherwise. So, yeah.
That's a pretty healthy list, I think, that you certainly are taking a look at that could be impacted next week. I have just a couple of areas that I was going to go ahead and go through. One being the commercial vehicles and trucks index. And if you look at the performance in the fourth quarter of last year, this group took a pretty big tumble. And again, April into May did the same thing. Both of these periods were when a lot of trade talk, breakdowns and fears and all were escalating. And so when I look at this on a relative basis to the S&P 500, commercial vehicles, even with this big move that we've seen over the course of the last 6-7 weeks, still, I think, is in a downtrend relative to the S&P. And you can see that this weekly PPO, this weekly relative PPO, has been mostly below the center line since all the way back in April of 2018. So this group overall, if things were to turn south, I think this is a group that would get hit again next week. So this is one that I would certainly keep an eye on. If we begin to, maybe we have a false breakout, that would be reason for me to maybe think about lightening the load. Now, as far as which stocks within the group, if you go into the scooter reports and you go into large caps and just type in commercial, well, I could have typed in commercial vehicles, but it'll list the stocks in this industry group within the large caps and then sort it by scooter rank. Because I think what this is going to tell you is which of these stocks will probably be least impacted because they've been performing better, and the ones that maybe have a little bit more downside potential because they have not performed as well. So for instance, Wabtec, if I pull this chart up, you will see that the stock is, still hanging in there above its 20-day moving average, but nowhere near its April and February double top that we saw. So on a relative basis, it's been not a great performer. And if things break down, you could definitely see something falling apart there. On the other side, though, you have a stock like Cummins, which is just broken out to a new high. So when we pull up that relative strength chart, this has been a stock, it's pulled back a little bit relative to the group. It's still gone up in June, but it hasn't gone up as fast as the group. So we've seen a little relative deterioration, but it's a stock that is broken out and continuing to hold that breakout level. So if I was going to hold one or the other, I would want to be in Cummins, which I think is clearly a much better relative performer, meaning, in my opinion, that Wall Street simply supports that company a lot more. And if Wall Street's putting money into it, that's generally where I want to be looking to invest as well. The other area I wanted to point out was machinery, industrial machinery, which has actually performed better and is holding its 50-day moving average on a relative basis versus the S&P. And you can see right now the PPO is remaining positive. However, this is a group that got crushed back in the fourth quarter, also tumbled in April through May, but it's a group that has held its own versus the S&P, especially in May when we saw all that selling. So we're starting to see some relative strength. If something positive comes out of this meeting, I think this is a group that could really benefit back to the upside, especially with that weekly PPO sitting right on that center line. So as far as the industrial machinery stocks go, again, in scooter order, some of the stocks to consider, you've got Dover Corp breaking out to a new high, Flowserve, which I think could be breaking out above a key resistance level. You can see right here, it's trying to make a breakout right now, which is pretty strong. And then the last one I wanted to mention was Ingersoll Rand. This is actually a stock that I don't own it, but I do have it. I have 3 portfolios that I keep, one of which is a more defensive type of a portfolio, and Ingersoll Rand pays a nice dividend. It's got a 90 scooter, been a very strong performer relative to the market. And so this is another one that I think if we get that rebound next week, this is a group that I think could really benefit, and individually some of these stocks I think could do well as well. So that is our trade talk segment, and some areas of the market that I think maybe you can focus on, some that might get hit, some maybe that'll blossom next week if we have some decent news coming out of those talks. All right, our final segment of today is What Would You Do? It's a popular segment. It ties into today's poll, and we've talked a lot about the financials, the banks, and some of the other areas in the financials like insurance, reinsurance, so forth. The question is, we've seen financials, and I'm going to let you start with this, Mary Ellen, but we've seen the financials really do well over the course of the last quarter. And honestly, when I pulled that up today to see the leaders for the last quarter, it surprised me. I did not realize that financials were the top performing sector in quarter 2. So the question is, will this continue? Do you expect financials to continue to outperform in quarter 3? What do you think?
Yeah, so actually this is all about trade talks as well, because if we do get some sort of a deal or if we get a deal, we will not see a rate cut. That is the speculation out there. If we do continue to progress without or go down the road without any progress, there is a sense that the Fed will come in and help bolster things with a rate cut. So in essence, a big part of our outlook, my outlook on financials, has a lot to do with whether rates will be cut or not. So at this point in time, there is more of a bullish bias that way, that there may not be a rate cut. But unfortunately, we're not seeing the 10-year Treasury acting in such a fashion. Tom touched on that earlier. We are seeing the 10-year yield continuing to drop to very low levels. So there's a little bit of a dichotomy there. But let's go ahead and drill down and take a look at some of the individual areas within financials. And interestingly, we are seeing that some of these regional banks really are not participating. Today, we're seeing a number of these large money center banks that are picking up. But this is KRE. This is the Regional Banking ETF. And actually, it is acting a bit more bullishly than I had anticipated, because it is now breaking up above these simple moving averages, potentially reversing this downtrend. And that really would be quite constructive. We can take a look at some of these smaller stocks that are moving today in tandem with the with the larger ones. Let me go ahead and make this screen a little bit larger. And this is Bar Harbor, only pointing it out because this is, again, a smaller regional bank that is picking up. And this is the kind of action that we are going to want to continue to see as far as some of these smaller guys reversing these downtrends. This is FBP, a small Southwestern bank, and that would be super constructive. It would take us back to something that we've seen certainly earlier in the year. We had a nice advance in the financials. So a continuation of that action would really be quite constructive, not just for financials, but for the broader markets as we continue to see a broadening out. We talked about small caps coming into play, and that move into small caps is actually something that we can key in here, because small cap stocks, if you were to look at the index, they are comprised primarily of small banks. The small cap index has a large component that is in the financial space, and I'm just going to pull up. So if we continue to see money flows into small cap stocks, we're not seeing the financials buoyed as much as healthcare and tech in small caps. But if we continue to see a flow into smaller names, banks by and large will participate as well. So in a roundabout way, I am suggesting that we very well could see a continuation of this move into financials. And this is JP Morgan Chase, one of the better names within these larger cap areas. And in addition to having a big, large banking component, they also derive a large portion of their income from credit cards, and which has really been a great boost to their revenue line. So,
yeah. So so your final answer is
yes. I think that the financials have a lot of reasons to continue to do well. Now, July 15th is when Citi, Bank of America, and these larger banks are going to begin reporting their earnings. So that's going to be your next big benchmark as to whether we will see a continuation of money flows into this area. But for now, it does look constructive.
All right. Sounds good. I'm going to say yes. And I hesitate, but I'm going to say yes. The one thing that bothers me is that on a relative basis right now, yes, we've definitely seen some strength. And this kind of shows you the strength that we saw in the second quarter on a relative basis. This is the XLF versus the S&P 500 on a weekly chart going back the last 2 years. And you can see we bottomed in mid-March and started to run higher as we opened the second quarter, had a huge run in April, and then kind of started pulling back again. And now you can see just recently this week having a very strong week again in the financial area. The thing that makes me hesitate a little bit is that we haven't seen the XLF move through the 50-week moving average since we lost that level back in May of 2018. So it's now been 13 months. You can see the relative PPO has been negative. So this group, even though, yes, the last quarter it's been strong, overall it's still in a downtrend on a relative basis. And so if I just looked at this, I would say no, that I wouldn't put my money here. But I think there are some other things that we have to consider as well. And the first thing that I would suggest is that here on this chart, let me just make this a little bit bigger here so that you can follow along, and I'll explain what I did here. So the top part of this chart is the XLF versus the S&P 500. Going back 20 years, it's a weekly chart. So you can see clearly in the 2007 to 2009 bear market financials, that was a disaster. We fell back. We had an immediate bounce back to the upside, pulled back, went sideways for a while, and actually started making some pretty good moves here to the upside. Now, if I annotate this, the pullback and the relative support, in my opinion, after all of this craziness went on back in 2008, 2009 through 2011, and we started settling down, this was a pretty important high where we had pulled back for about a year, and then we broke out. And if you notice, when we've pulled back, I think this is a key area of relative support, and we're almost sitting on it. So I actually think that the next move in the bull market, and bull markets rotate, just because technology and consumer discretionary are leading this month and this quarter and this year or these last 2 years doesn't mean they're going to lead all the way throughout the entire bull market. I expect the financials, because interest rates are so low, that if we get any kind of movement to the upside, financials are going to do well. And the reason I say that is if you look at this top part, which is financials versus the S&P 500, compare it to the 10-year Treasury yield, and then down here at the bottom is the correlation. Now, the correlation, what this is measuring is it's trying to decide if there's a positive correlation, meaning that when 10-year Treasury yield moves higher, let's say it's moving up, does the XLF versus the S&P 500 also move higher? If it does, that's a positive correlation, and we would get readings close to 1. If they moved in opposite directions, we'd get readings close to -1. Well, I think since things have kind of normalized here over the last 9 years or so, you can see that for the most part, it's not a perfect correlation, but for the most part, the direction of the 10-year Treasury yield determines to some degree the direction of financials relative to the S&P 500. And if you notice, we're getting close to this center line. We haven't spent much time at the center line or below it. So I think one of two things is going to happen here. I think that either that we're going to get back into a positive correlation, meaning if you look at the last couple of months, few months, the 10-year Treasury yield has been going straight down. I talk about this every day on the show here, but financials have not broken down on a relative basis. And this is a major relative support level. So I think what's going to happen is that we're going to hold this level and the 10-year Treasury yield is going to bounce back up. And if that's the case, we will see this move back into positive territory. And I believe that you're going to see the XLF outperform. Now, that's making a lot of assumptions, and we'll see whether or not, it happens that way. But if we were to break down here on the XLF versus the S&P, I think we'd have to reevaluate. If the 10-year Treasury yield keeps tumbling and then we break down this relative strength chart, then I would say, okay, we need to reevaluate that thought process. But for now, I think we're going to bounce. I think the financials are starting to lead to the upside. I pointed out a number of stocks today that are breaking out above some key short-term resistance areas, and I think that's going to help us to outperform. One final thought. Here on the small cap financials ETF, after the huge move we saw in the first 2 months of the year, I think we're consolidating in an ascending triangle. So this small cap financial ETF, if we were to break out above 55.5 and small caps keep leading, and then also financials lead, this is an ETF that I would keep a very close eye on. I actually think the PSCF could be a very strong performer in the second half of 2019 if we can get this breakout, so watch for it. And that is the end of this segment. We will bring a summary up, some of the things that we just talked about. And of course, Mary Ellen, we both agree that it is okay to overweight financials heading into quarter three.
Mm-hmm.
And we'll see whether or not the audience agrees with us, because that was our poll today. Would you own financials?
And it's interesting. We're going into July 4th, and it's a holiday week. But I will say, from historical standards, it can be busy. And we have an employment number coming out next Friday. So don't just go to sleep next week.
Yeah, there's always something going on.
Put your stops in place.
Yeah, and especially the jobs report. I agree. To me, that's the stock market's report card. That's like an earnings report coming out for an individual company.
Yeah.
The whole market, the whole idea that stock market's going to go higher is based on the fact that we're going to have strong jobs. When jobs turn down, the stock market turns down. There's a lot of charts we could pull up to show the correlation there. Mm-hmm. So jobs report, always very important. That'll be out late next week, as Mary Ellen said. But the overwhelming response here, Mary Ellen, is that the audience disagrees with us.
They do. Okay. Well, maybe they didn't listen. No, I'm kidding. No, I can understand why, because we've had other downtrend reversal attempts that have failed. And the prognosis with that 10-year right now is it's not supporting the case for that. But the charts are doing, as you said, we're seeing breakouts above key levels. Mm-hmm. So it's on volume.
Yeah, it's going to be an interesting question that's going to get answered, obviously, over the next 3 months. How far does the 10-year Treasury yield go down, though? I mean, really, with growth. I mean, I know the inflation is not a problem, but if there's any hint of inflation, or the dollar, and if the dollar continues to weaken, commodities will likely rally. And that could create some of the inflation that the Fed would be looking for to begin justifying possibly raising rates again. You raise rates. I don't know. That seems like the right formula potentially for financials, but we will wait and see.
That's right.
All right. Well, before we wrap up here, just a quick update. You can see the Dow Jones Industrial Average currently at 63 points, the NASDAQ up 23, the S&P up 11. And really the big story, again, the last couple of days here has been the Russell 2000. Really not much pullback. This has just been a very heavy, concerted buying effort in the small cap arena. Small caps relative to the S&P 500 hit multi-year lows or approached them. This is the time, if you're going to maybe get involved in small caps, certainly to do it. It seems like that's what's going on here. But Mary Ellen, I want to wish you a solid weekend and see you back.
Yes. Sounds great.
All right.
You too, Tom. Have a great weekend.
Thank you. Also want to wish all of you a good weekend. I want to thank you all for being with us today. Please remember to complete the survey as you exit. It's located below the video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we will see you back here on Monday. Happy trading.